The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the March 16th, we'll have to call it the Massacre Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to remember that life is always happening for us, not to us. That's right. When you make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Please get those emails in early. And inside our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Massacre. It's still Marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now we got all the indices trading in the green out here. You've got the, let's show the charts here. There we go. You got the Dow down 2037. The S&P up 224, NASDAQ 640, Russell 135. Sort of getting used to these big numbers here, but these are gigantic swings intraday, that's for sure. Spot volatility index up 20 points. She's trading out at 78 buckaroonies. Gold is only off $4 right now, staging a big rally from the lows. It's off trading out at 15.12. Silver still down 10%, $1.38, trading out at 13.12. Light sweet crude up 270, 29.03 is the print there. Natural gas back 4 pennies. Treasury bonds up 3 full points out there, leading the charge dollar-wise to the upside. I don't even know if this is an ETF. BioNTech, SEBNTX, up 31%. Otherwise, it's really all ETFs other than Clorox. Of course, they're making a big comeback with regard to keeping things clean. To the downside, AutoZone off $143, 14% out there. Man, that's a schnocker. Google's off $100, 8%. Sherwin-Williams off 85, 17%. Nobody's going to paint anymore? What? That's crazy stuff. In any event, I want to look at what you want to look at. No request just yet. So let's begin by just taking first it's about trying to identify support out here. It's looking for support. I think that's really so. Let's talk about a couple of different things. I guess I'm jumping around just because my eyes are seeing screens. What is it that I can share with you that is helpful? Long-term intraday, the whole 9 yards out here. So this is pretty interesting. Not unusual. You ask yourself the question, so why did price, we saw that nice rally this morning, why did it stop where it did? I always ask myself that question. And then I dart my eyes over to another chart out there and say, oh, there's the reason. So if you take a look at this here, it wasn't profiles, Jay. If you just take a look at this, now this will really be helpful for you, Jay, Duffy. Yeah, in essence, went to a version device out here, I suppose. But what it really, if you take a look at this chart, we've talked about this before. Take a look as an example. Take a look at last week and look at Friday. Now, the black horizontal lines on this screen out here are the opening range bars for the 30-minute time frame chart for the NQ. So you're really just taking a look. What you're doing is you're marking off the bar from 6 to 6:30 in the evening, each evening out here. And that's what took place yesterday. If you take a look at those black horizontal lines, and where price made it right up to was the bottom, or the low of that 6:30 session. So that's really an important level. By the way, that's 75.41 out there. And if price is able to get back inside that range, during the day. I'm not saying that it's going to. Resistance so far is held, so that's important to know, that 75.41 level. If price did get back inside there, you would anticipate that this market could get all the way back up to where the futures opened last night, 79.20. Not making that as a prognostication out here. I'm asking you to watch 75.41 for this point through the rest of the day out there. Now, what I'm suggesting that you do not take a look at last Friday here. We did see that price hovered with inside that opening range out here. Then price moved lower, found a bottom, but it was right here at about 12:30. Was it 1 o'clock in the morning? We saw a nice move and price got above that opening range. That was suggesting from an intraday standpoint, unless you saw some type of topping signal to anticipate the market moving higher, which it did. It went to limit up, as we know, and then it traded lower, made a retracement out there, moved higher. But so watch the opening range out here. Nothing to do with profiles or anything along those lines, but very helpful. And you can see as you're looking at this chart out here, here we're back in the March 11 time frame. You see price moving below the profiles, continues to find resistance at that bottom of that opening range. Really great tool out there. So since I just saw that, I thought that I would go ahead and pass that along. Now, let's go from smaller time frames, that being a 30-minute time frame, to something larger. Let's go to the, since you mentioned profiles, I'm just going to allow you guys gals to kind of lead me along, lead the horse to water, so to speak, out there. And so Jay mentioned profiles. So let's go find our profiles. First, I've got to find my cursor. Oh, it's on my other computer. Let's get it back here. And with this one mouse, folks, I power 3 computers. It's pretty cool. It is really cool. Logitech technology is pretty amazing, isn't it? Just take a look at what you and I are doing right now. Now, when we take a look at profiles, Jay, you probably are aware of this, but although I don't know for sure because this could be coming from my advanced Doppler tool, that's really what's on here right now. But the ES Mini is attempting to form a new profile, the bottom of which is 24.25. The center is 26.52 out here. And if we take a look at where price also stopped in the ES Mini, was right at that center of that bearish structured box. Now, you may be new to me, Stevie, saying bearish in structure, so I'll go through it. For those of you that already know this, I apologize, but this is good. We're all in the same boat here, so to speak, and I want to be able to help to assist folks with being able to see what it is that we look at, because this show, we're just taking a look at technical analysis. Every now and then I might throw out something fundamental, but really this is all about understanding the technical patterns out there. And so here you can see that center line. It's very small because it's just trying to form today. 26.52 is closer in proximity to the top at 28.03. By the way, that would be your counter trend resistance level. That would really be where sellers could be lined up on any counter trend rally, should we get one. Not saying that we will, but should we get one. 24.25, a close below that today. That would be bad news out here, assuming that the profile remains intact out here. But when the center is closer to the top, it's considered a bearish structured profile. When the center is closer to the bottom, it's considered a bullish structured profile. So let's go ahead and put price back on here. We can see that price, the rally so far today, or really was this evening, or last night, right at about 26.52. When I say rally, not really a big rally or anything. Just from the initial open. But here is our profile. So support is held. Support is held out here inside the, I know it's hard to believe, inside the ES Mini. So watch 24.25 today. 71.21 is the print on the NQ, and the Dow is 28.43. Those are your current daily levels of support. Closes below that would not be good. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 1956, S&P 217. Let's go to our first question out here. First question coming from Willie. Willie says, can we look at BP? I'd like to buy some shares out here. So, yeah, let's go take a look at British Petroleum. Let's take a look at the three different time frame, daily, weekly, monthly charts out here, looking at profiles. Prices below all those levels out here. So we're not going to be able to use this to try to identify a bottom, at least not just yet out here. So let's go to our other charts here and see if we can assist Willie. So, Willie, what you're going to want to do when you're going to buy charts out here, try to buy some shares is look for some type of bottoming pattern. And right now what we have, what Stevie has on his charts out here, is that prices moving lower, doing less relative energy. Today's not that signal because so far what we have, at least as of 119, Willie, is a bearish candle out here. And that was the gap to the downside. And that's a bearish candle following a hammer candle that had formed inside of British Petroleum BP on Friday. And you know our expression, when you close below the low of a hammer candle, if you're wrong, if you're long, you're wrong. Okay. So we got that out of the system. We are in wave number 7 as well. So there's two potential bottoming signals that are present here on the daily time frame for BP. But in this case here, I'm going to suggest that what you would do is you would wait for some type of bullish reversal candle to form. And then the question will be, can price get above Stevie's red line? Now, currently that's priced at 25.33. That's the oscillator and change line. Willie, I teach that to subscribers. You can learn that. There's a workshop, a 1-hour workshop that is on your members page if you subscribe to Mastering Probability. So if you'd like to learn that way, as you're tracking BP, you'll know the level where a counter trend rally could take you up to, or if price is able to get above that level, that then you'd probably run to the bottom of that daily profile, 3038. We're not there yet, but you've got the potential for bottoming signals here. And I can teach all those details. It would really be pertinent to assisting you with that. I don't know if it's a long-term trade, short-term trade, what your time frame is. If we look at the weekly time frame out here, we also have the potential of wave number 7. That's letter G on my screen. We're going to be in bar number 8 of a TD setup 9 count. Those lows can occur on bars 8, 9, or the bar following 9. So keep your eye on that daily time frame chart out here. And on the monthly time frame chart, what do we have? Looks like a large A to B equals CD to the downside, at least one large A to B equals CD to the downside. Now, on this set of tools, I can't draw that pattern, but I can come back to the other charts to figure out where that large A to B equals CD pattern is. So let's go do that out here. And you know what I was doing when I'm talking about the A to B equals CD pattern that initially showed up from my eyes is the A point is out here. Looks like it's either the week of 6-1. Well, let's get the right one. That high was 53.48. The following high was 53.48. Okay, so we got the high. Doesn't matter which one we use, July of 2014. And then we come down here to February of 2016, up into the high of May. And you can see we're at the 1-to-1. That was 21.36. We're at 19.16. So this would say, now this is the monthly time frame chart, the price's next target would be 14.16. Doesn't say that's where price would stop, but it says next price target on the A to B equals CD approach would be about the 14.16 area out there. So you want to buy? Sounds great. I'm going to suggest that you need to see that bottom signal occur in the daily time frame, and it's not there just yet. So, Willie, I hope that helps you out with regard to British Petroleum. Go take advantage of learning that Rhodes momentum indicator as well as the oscillator on change line. I know that it will help you out a ton. We've got another question here coming from Ani Kumar. Hopefully I did a pretty good job of pronouncing that. Most of you won't know if I pronounced it correctly or not. But what we're going to go take a look at is Roku. R-O-K-U is the ticker symbol out here. So let's begin that journey, and let's begin by looking at its TAS daily, weekly, monthly profiles. Now, if this is going to find support out here, let me see, what are you looking for? You're just asking, how does it look? If Roku is going to find support, it's not that far away from it. Support would be the bottom of its monthly profile, and that's at 67.17. The low so far that we've seen is 70.59. You're trading at 72.44 out there. So now let's go take a look at the daily time frame chart. So there's potential, is what Stevie would say to you, Ani Kumar. And let's go take a look at the daily time frame chart. What do we have out here? Any kind of a bottom signal? We got zilch, nothing, nada, zippo. Possibly in wave number 6. That's letter F on my screen. But that's it that I've got on the daily time frame. Let's go look at the weekly time frame. What do we have out here? Let's go populate that. Price here on the weekly time frame is going to be in bar number 6 for a TD9 count. And it looks like price is trying to target about the 61.85 area. I don't recall the number I gave you on the monthly profile. We might see that in a moment. But 61.85 is the message. The next breakout support level inside of Roku. So that's in the general area to be looking at. If we look at the monthly time frame chart out here, unfortunately I don't have enough, but 67.17 was that number. And let me see, what else do we have out here? Yeah, so that's 61.85. 61.85, 67.17 seems like a wide range, but really not in today's day and action out here. So I'd be really looking at that, I suppose, that 61.85 level out there. So I hope that helps you out. Thanks so much for writing in. That was, again, ticker symbol ROKU. John in Sarasota says, Dust, where is it going, please? So to look at dust, what we really need to do is take a look at the GDX. We ought to do that because that's had one heck of a rally thus far. But that's the weekly. Let me come here to the monthly time frame chart. See if there's anything that we can find out here to assist us, John, in taking a look at the GDX. And we'll go take a look at the dust chart out here. And inside the GDX on this monthly time frame, I don't have any kind of support that it has hit. Even though we saw that rally off the bottom, we'll look at the daily. I don't have anything on the quarterly. Let's come back to the daily time frame out here. What is it, if anything, that Stevie can see here inside the GDX? And the answer, John, is not much. Not much. Not much. Weekly time frame. What do we see out here? On this set of charts, I don't see much out here, from a bottom standpoint. So, it's because you're asking me where is dust going. I've got to try to figure out where is the GDX going. And this is just simply trading along with gold. And I think, John, that maybe that's the place that you and I need to really look at is the gold contract versus taking a look at the GDX. Nonetheless, let me put up dust on my screen for you since you would ask. At least you can see where the market profiles are, either support or resistance. Hopefully, my keyboard here that's controlling 3 computers will start working. Come on, what is the deal here? And I'm not referring to you, John. I'm referring to Stevie here. So now we've got dust profiles out here. Where is dust headed to? You know, you're above the daily profile, so support there would be 554 on a pullback. You're above the top of the weekly, 773 out there. I don't know that that's really going to help you. It's been one heck of a move. I think that what we really need to do, John, and we'll do this when we come back from this break, is spend some time taking a look at Goldilocks. What do we have going on in Goldilocks? Look, it's traded lower in all of the major currencies. And so the real question is the move lower in gold over? Is it over?
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 2,000, S&P up 226 out here. So let's go back to the gold chart. We were looking at last week, I believe, when you and I were taking a look at gold. One thing that we had noticed was that price had broken through this little rising price channel. Now, I've got horizontal trading ranges. Those are the green and red Those are the green and red represent weekly and monthly being the red color out there. And so we had noticed that what gold had done on Friday was it looked like it was going to close below that rising trend line channel out here. And that suggested to you and I that price was likely to make its way down to 1462. Now, 1462.70 happens to be the horizontal trading range. And we could also see that at that level, this area here had been tested in 2019, back in November timeframe, and this had held. So yes, did price get down below that? Yes, but in generally speaking out here, that was a level of support that we identified last week, and in essence, thus far, it has held. So now let's go take a look at what else is going on in gold. And let's go from the monthly time frame. This is a weekly chart, by the way, that you and I are looking at. And John, in order to play dust or GDX, I really think it's really advisable at this stage here to be really watching what the patterns are inside of gold. So now in a monthly time frame, what price has also been able to do is push its way down to the oscillator unchanged line, the green line. Remember, when that line changes color, goes from red to green or green to red, oftentimes what we see, the normal retracement and pullback, is a test of that level. So at this point, at 1:31 in the afternoon, on March the 16th or 17th, whatever the date of today is, I think it's the 16th out here, price has held that level of support. Now, if we see price close below that green line level, a pullback to 1156 is a possibility. We're not calling that just yet, because right now on a monthly basis, price is sitting right on support. But watch that level out there, folks. Watch that level. That's really important. It is an important area. On a weekly time frame out here, what do we know? We've got the Rhodes Momentum Indicator top. Whenever you get a topping pattern, it says price should push its way back to support. That's what took place last night, or this morning, I should say, as price pulled right back to its TD 9-count breakout level, 1465. So I believe we had a 1462 with regard to horizontal trading ranges. Now we've got a TD 9 breakout level, 1465. It is no wonder that price hit that area and has bounced. At this stage, that's all that it is, folks. Yes, it's come back to key support levels out here. Don't be fooled, though. Don't be fooled. So far, just a bounce. And the reason that I say that is because I haven't seen any resistance levels taken out on short-term time frames, such as a 30-minute time frame. If we see that, then that would be a different message. But we're quite a ways away from that taking place out here. Not taking place, from price is well below that area. That's really what Stevie was trying to say. I should have said it like that the first time. Now, on a daily time frame, price also got back to another daily breakout level, 1471.20. So those are the reasons why we're seeing the bounce. But do I see a bottom? No, I just see a spring off of support levels that we looked at on daily, weekly, and monthly, horizontal trading ranges, all that. So all that makes sense. But with regard to where does price need to get above to say that it's out of the woods, you need to see resistance levels start to fail. And if we look at the 30-minute time frame chart, the resistance level is 1590. We're trading at 1488. That would be one heck of a rally. We're not there as we speak just yet. Right now, price is trading with inside its 30-minute profile. Top is 1519. Bottom is 1457. All right, enough of gold. Let's go out to Ron in Denver, Colorado. Ron, thanks for calling. Thanks for your patience and holding. How are you today?
Great, Steve. Sorry to interrupt your conversation about gold. Very interesting. Thank you very much.
No, you didn't interrupt it at all.
I was looking at doing on Microsoft a bull spread going out to April 17. Buying a 143, selling a 147. You get in there for about 220.
Okay.
And I just wondered what your thoughts would be on Microsoft.
So first, what we're trying to do is see is Microsoft found any kind of support out here. And right now, price is below the bottom of its daily profiles, the bottom of its weekly profiles, and well above the top of its monthly. So I don't have any real support here using the profiles. We're going to go take a look at the breakout levels inside of Microsoft, give you some support and resistance to assist you with putting on that trade, or maybe not. And let's begin by taking a look at the daily time frame here for Microsoft. Get a feel for what it is doing out here. So as soon as we can populate this, as soon as my keyboard starts to work. Golly gee. I love technology. I just hate it when it doesn't work, Ron. Especially during the show. Okay, so today is going to be inside of Microsoft, is going to be wave number 6. That's letter F on my screen out here.
And we know that wave number 7, letter G, is a level where we can see some nice turnarounds out here. I need to expand my one of my tools out here. I just got to find out where I put that tool. If it's here, I apologize here for the pause, but without this, I can't find some possible levels of support. There we go. So valid lines to keep. Let's set that to 0. Will be good. And okie dokie. So the next level of support inside of Microsoft is 135.62, and the low so far today is what 137.49. Since you're in wave number on the daily chart, since you're in wave number 6, letter F out there, and the soonest that you could get wave number 7 would be Wednesday. That's assuming you see a higher low tomorrow and then a lower low on Wednesday. And if that were coming in around that 135.62, that might be a support level to be looking at. So that would be one thing that I would look for. As far as resistance, it's going to be Stevie's red line, which right now is trading out at 157.50. That's also the center of its daily profile out there. So kind of our range right here that I'm seeing on a daily time frame is 135.62 at support, if it can hold and identify a bottom signal, up to about the 157.50 level. That's a daily. The weekly time frame chart, let's go take a look at it, see what tools. This gives us 135.61 on a weekly basis as a breakout level inside of Microsoft. So we're not there just yet. Do I see any other kind of bottoming signal on a weekly time frame? I do not. And if price were to close below 135.61, it would suggest to you and I that price would make a run to the 115.52 area. And that's not out of the realm of possibilities out here. But 135.61 is the level to be watching there. And on the monthly time frame chart, see if there's anything here that pops up. It doesn't. The monthly time frame chart is suggesting that what Microsoft may want to do over time is pull back to 102.35. But that's fairly further out there. Now, does any of that help you?
Yes, very much so. I'll wait till Wednesday and see what kind of see if it breaks down and maybe jump in at that time if it pulls back a little bit more.
Yeah, we don't have any other signals out here. I mean, if I do an A to B equals CD pattern to the downside, I'll come back to the other charts out here. We'll take a look at this just to give you some type of price projection. The A to B equals CD pattern that fits my eye, and the A to B equals CD patterns are somewhat subjective, but here is the one that would fit my eye. And this A to B equals CD down pattern would generate or could generate a Gartley buy pattern. And that right now, the 1-to-1 level is 136.30. So it's kind of matching up with price still moving lower. 125.77 is the 1-to-1.272 area out here. So I think that's what I would still watch for inside of Microsoft. Okay, Ron?
Yeah, there's a little penny stock out here in Denver that's making a big move today, and
hey, we're about to go to break. Hang on. You finish this.
And the reason why they claim they can.
We'll be right back. We'll be right back. Steve Rhodes with TFNN.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 2179, S&P off 246. Ron, sorry about that. I wanted to let you go ahead and finish that, but we were just going into a hard breakout there. So, but let's go to our next caller on the line. That is Robert in Overland Park. Robert, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm hanging in there. I hope you're staying healthy and safe as well.
I am healthy, no problem so far, at least that I know of. So,
good.
Yeah, all is good. And what did you want to look at this afternoon?
Can you look at UNG? I know you'll probably look at the futures, but I'd called last Friday, and it's just not. I bought a little starter position last week, and it just doesn't seem to be performing like I want it to, and I'm considering just cutting it. And on Friday, we spoke, and you said, well, you'd actually kind of liked it, and I just wanted to revisit your thoughts on that, given what it's done today.
Sure. I'll revisit my thoughts. I want you to revisit your thoughts, too. You know, when you've been in the trade for a few days, it hasn't performed the way that you've wanted. If you can get out, kind of break even, or just a few shekel loss or something like that, so it was a starter position, it's never bad to go with your instinct out there. So I would say that, but I'll give you what the chart is communicating to you and I, the daily time frame, the April chart. And yes, you're right. For natural gas, we're going to take a look at the natural gas contract versus what UNG is doing. We'll look at it. It's slightly different, and that's why we want to use the natural gas contract and see what it's doing. So when instruments make bottoms, one of the more ideal patterns, it doesn't work all the time, but it keeps giving you, if you keep your losses, your stops in appropriate, your proper position sizing, it allows you to keep coming back in. And so one of my favorite bottoming patterns, not because I named it after myself, that was just try to come up with some name that would make sense out there, the Rhodes Momentum Indicator signal. And that's what formed out here when it made its bottom. And that's what I'm referring to right here. If you're watching this on Tiger TV, is the March 9th candle. Price was pushing lower, doing less relative energy. Nice big old bullish engulfing key reversal session out there. There was prior to that, there was Rhodes Momentum Indicator signal that took place with the bull sash out here. What we liked about the one on March 9th was that price also closed above Stevie's red line. That's what you and I are going to talk about next. Once you're over that, first it's telling us the red line tells us we have a price oscillator that's below zero. So that can be somewhat bearish. However, it's below zero and it's rising. So that says rally, counter trend rally, or something along those lines. What it doesn't say is bearish, and then it wants to keep moving lower. So instead, what natural gas is continuing to do is continuing to test support. Now, in this case here, it's two levels. It's the bottom of its daily profile. That's at 1.786 out here, and it's Stevie's red line. So there are two levels of support that natural gas has tested and rejected, and therefore, if you were long natural gas, there would be no reason for you to exit this trade.
Now, if you were long natural gas, you could have your stop in, and that way in the futures market, if something goes awry, likely you'd be taken out, and you wouldn't have some extra risk out there. Whereas if in the overnight session, if natural gas starts to trade lower, your stop could easily get jumped inside of UNG. But the actual natural gas contract, and think about it like this: in a market here where everything is being thrown out, I'm not trying to convince you to stay in this trade. I am, in fact,
I understand.
Absolutely not trying to convince you to stay in this trade. I'm just here interpreting the trade and just saying, hey, in an environment where we're seeing liquidation because of whatever, hedge funds, sovereign debt issues.
It's held up pretty well.
What's that? Yeah.
It's held up pretty well in light of that. I just don't like the slope of the price oscillator line. It just doesn't have much of a slope to it. And when I go back over history and look at that, for something to really get going, you want the price oscillator line to get a decent slope on it. And it's just kind of petering out.
Yeah. So that's where I really, when I focused on and listening to you or trying to listen to what you were saying was, hey, this hasn't done what I thought it would do after a few days being into it. And so there's nothing wrong with that instinct. If you were asking me, what's the natural gas chart telling you right now? I'm saying of all the assets that are out there, asset classes, this one has held up really well.
I agree with you on that, and maybe it'll find a bottom shortly, but it's just the slope of the price oscillator line bothers me.
Yeah. So there's always, as Tom has been able to tell us, there's always another trade. There will be another trade. Did UNG generate a Rhodes momentum indicator bottom? It did. It took quite a bit longer. Has price tested support? It hasn't. That would be at 1382. But it's really going to be the natural gas contract that's influencing what UNG is doing. So I don't know what else I can provide to you or for you, but it has held up really well on the daily time frame. It's still bullish on the daily time frame, the natural gas contract.
All right. Well, thank you for taking a look. I appreciate it.
Oh, my pleasure. Thanks for calling, and best of luck with whatever decision it is that you make. Let me see. I know we've got some other questions that have come in by email, so let me get to those. This one coming in here from Hector and the fuel injectors. And Hector wants to buy a beverage company. NBev is the beverage company. Is the beverage company still New Age Beverages? And so it's trading below the daily, weekly, monthly profiles out there. We don't like that, of course. So that's not, we can't use that to help us find a bottom, but it is telling us you're below support for all time frames. So we better find a real nice bottom signal here, Hector, if you're going to go ahead and try to buy a few shares of NBev. And you say you would like to catch this falling knife. Well, if you'd like to catch it, you're in day number 8 or bar number 8 of a TD setup 9 count out here. And I would prefer to see this end the day with a hammer candle. And it's not a hammer candle right now. So Stevie's going to say, from a daily perspective, a daily time frame chart for NBev, keep the powder dry for at least another day. We know that a TD 9 count bottom can occur on bars 8. That would be today, to 9, or the bar after 9. If we had a bullish reversal candle, I could say, oh, all right, maybe you could justify it, or I could go to some type of short-term time frame. But I'm suggesting just to sit tight here. If we look at a weekly time frame, on a weekly time frame, price has been pushing lower, doing less relative energy, and you want to catch a falling knife. What I want you to get is a beautiful fireworks show, the kind that where those fireworks, they go really high up into the sky out there. And so what I would prefer that you do here for a longer type term trade out here inside of NBev is wait for the bullish reversal candle on a weekly time frame out here. And if we can get that, the Rhodes momentum indicator inside of NBev, you might have a better, larger, bigger trade out here. You might not, but you might. So the weekly time frame is saying, hey, be a little bit more patient out here. And on the monthly time frame, unfortunately, NBev hasn't traded long enough for me to pick up any real great signals out here. So Hector and the fuel injectors, I say just be a little bit more patient with regard to NBev. Keep watching it tomorrow, the next day, for a possible bullish reversal candle out there, and then fire away. And maybe it won't be a falling knife. Maybe it'll be just simply a spectacular fireworks show that you get to watch
from wherever it is you like to watch it from. So thanks so much for writing in. This is Steve Rhodes with TFNN. We'll be back in just a few for the 2-minute wrap-up.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So, I hate not being able to answer a question. Earlier, John in Sarasota was asking about dust. And then we've got Tom G who's trading the nugget. He wants to understand where the nugget is going. And so I pulled the GDX chart back up. This is for both of you. Only you. So if everybody else is listening, close your ears. This is only for John and for Tom. I'm just kidding you. Now, if we take a look at a 30-minute time frame chart for the GDX, we can see 2 of the bottoming patterns that you and I use to help us identify as a market possibly for a time frame showing any type of bottom or topping signals out here. Where's support and resistance? Well, here we saw the GDX moving lower, doing less relative energy, generates a hammer candle out here. This was on Friday. Then we see the gap down this morning. That was bar number 8, by the way. That low gets tested and that holds. Bar number 9. So we got a TD9 count bottom on a 30-minute time frame, a Rhodes momentum indicator bottom pattern on a 30-minute time frame, and that was going to suggest that price would move up to resistance. Well, just turns out that shortly after that, a bearish structured 30-minute profile form, and that's where price found resistance in the GDX. 2131 is the number. Slightly above 2131 is the TD 9-count breakdown level. That's 2154. Tom G., John in Sarasota. What I don't know is whether or not the GDX is going to be able to get above 2154 or 2131. I can tell you that's at resistance. This would tell you, if you were an intraday trader, a tag and rejection of 2154 would say to go long the dust, short the GDX. Whereas if price is able to close above 2154, this would say the GDX has more room to the upside, and so too would Nugget. So I think we've at least identified the patterns inside of the GDX to help those of you that are trading the GDX, the Nugget, the dust, any of those, and just a great set of tools and signals that I'd love to be able to teach you. Just come on over to the homepage of TFNN.com, sign up for Mastering Probability. There's workshops there that will teach you those patterns, and be safe. Stay very safe, please. And I'll look forward to seeing you on Terrific Tuesday. Let's hope it's a terrific Tuesday. Have a magical, magnificent Monday, folks.
Since 1980.